Welcome back to another video. In this one, we're going to be breaking down a trade using my reversal model. And this model includes things that I've taught in the previous lectures on the channel. So we'll be looking at this step by step, just going from my hourly time frame down to the 1 minute, showing you everything I used to take this trade and how you could have framed the exact same trade using what I already teach. So starting off, just looking at this chart, I want you to take a few seconds and just imagine what I used as a point of interest here. Because as you know from the latest lecture, I talked about choosing the right PD arrays. Specifically, I mentioned imbalances that have been used by price before and which ones you should mark out. And these are usually the first imbalance that forms for a leg that takes liquidity. And if you want to learn more about that, I suggest you watch the previous video. But I'm going to go ahead and turn on the drawings here so you can see and see if you had the same one marked out. So as you can see, I've gone ahead and marked out this series of imbalances right here. When you have two smaller imbalances right after each other, you can combine them like this. And you can see that this was the first set of imbalances from this leg down to this leg higher that took liquidity. So in this case, we draw this one out and you see price has used it around this area, displaced above, retraced into, same thing here, retraced into one more time. And so now that we have our point of interest for this day, you can see around London, we had actually displaced below this large imbalance right here. So to me, I was monitoring, are we going to do a push up higher to then manipulate even further? Because I was seeing this as a market maker sell model with the original consolidation being at 5 o'clock. So essentially, I'm looking for buys, but I want to see a sell occur first. This should be my manipulation. And so I wait for market open. You can see we actually get a sell setup as we retrace into this, taking out the high, forming a quite rapid sell down here. And you can see price did not stop around these areas, which I was also monitoring, this imbalance right here, because price had used it before. But if you want to be really specific, you have to zoom out a little bit more and look to the left. Where is price slowing down? Where is it showing you the signs that it might be a likely reversal area? And you can see this one fit beautifully. And so I see price come down here. I then wait for 10 o'clock. I want to see 10 o'clock open lower. Why? Because I need an SMT. I want to see an SMT at my SMR, always, like we've discussed before. So now that everything is super clear on the higher time frame, we can go down to the lower time frame, knowing that our point of interest has been reached. So being on the lower time frame here, just wanted to showcase everything I could with this move. So this was just a textbook 10 o'clock, opens low. We get that double sweep, right? That's what we want to see. And we want to see an SMT form at that low, at the point of interest. At this point, I already know. I'm looking for that first signature that we want to go higher. And what do I see? I see that we have a low, high, higher low, higher high. This high gets displaced. Then retrace into it. This is your mitigation block. That's the entry right there. So as you can see right there, that was the first entry where I plotted this P&L tool right here. And in terms of stop placement, if you want to be safe on your stop here, you already know that this low should not be taken, because this is now the SMR low. But if you want to be a bit more aggressive, you can place your stop below that mitigation block. Because ideally, if price is truly bullish, it should not take out the low of that mitigation block. And if you miss this entry, don't worry, there was another opportunity right here. You see this breaker right here, where we have a low, high, lower low, higher high. This one gets displaced exactly at 10:09. You then wait for price to retrace into it, which it does right here. This entire candle is your breaker. And you can then do the same thing, stop below the breaker, and you would get a similar entry, right? As for this day specifically, the price action was not the best. As you can see, price went sideways for pretty much the entire day. If I go ahead and scroll to the right, it kept going like this until market close. So what do we do when we're looking for targets here? Because obviously we need to know when to get out, what areas should we partial, and what area should we monitor in terms of price wanting to go higher or lower. So first things first, as you can see, we were inside the macro. But just to walk through that again, we're inside the macro. We reach a point of interest. We have SMT. And then you can see, if you followed my lecture on time, this mitigation block lines up perfectly with reclaiming this cycle low. So you already know you displace both the mitigation block and the previous cycle low, aligning everything like I said in my time protocol. Retracement into there, immediate buy, right? So knowing that everything is aligned for us, we need to know where to get out. Now in this case, when you have such a large manipulation move on the left side here, as you can see, price had that huge drop lower and then turns around down here. When you get a move like this, usually what you'll see is that the right side is going to be a bit slower. And the reason for that is that price takes its time to balance out this side, as it was really rapid down here. And so the first thing you should mark out when you have such a huge range is, where is my midpoint of this manipulation leg? So you take your Fibonacci from the top to the bottom with a simple 50% and see, where is my 50% of this manipulation cycle, this entire 90-minute cycle from this high to this low, because this is a key area to monitor, as 50% is usually where price wants to go before it reacts. So you can see price moves higher, stops right before that 50%, finally takes it. That's a partial right there, because we also know that price has been so slow, we can't be greedy with this trade. We see that price is really taking its time. You should know that, okay, this is a valid point that I should partial at. So knowing that we have our first partial here, we can go ahead and move our stop as well. If you enter down here, you're already at break even. At a point where price is all the way up here, it's displaced this high, creating another fractal market maker buy model here. Once that occurs, you can go break even, no problem. Same thing here. If you entered around this area, you can go and put your stop below this low, because you have a fractal SMR here. See that? Original consolidation, left side, smart money reversal into our breaker, and right side. So this low now should hold. So you can put your stop here, or if you already entered here, no problem, you're protected. First partial, and you see price finally decides to go higher into what? Well, as you can see, gone ahead and marked out this. At 9:45, we have these two imbalances. I'm sure maybe you've heard of ICT mention the first presented fair value gap of 930. Well, I can tell you that you can use the same logic for the first macro imbalance, especially when you have such a manipulation. You want to monitor how that macro is traded. And it's a perfect target in this case, because it lines up as well with the fact that we have our 50%, and you already know that the original consolidation in this move is quite high. So we have to monitor these areas. And you see that price right here taps into that imbalance, does not fully reach the midpoint, and then decides to go lower, a bit higher, but generally just stays around this area. And by this time, you're already going to be out, because the prop firms don't allow you to trade overnight, of course. So towards the end of 4 o'clock, you likely just have to cut the position based on time. But if you already took partials at relevant areas like the 50% and this first presented macro imbalance, then you already have a decent run. And the reason I say this in terms of the imbalance, right, is that we already know price has spent a lot of time here. It's likely not going to go here or here right away, because we see that price doesn't want to do that right now. So we have to find other targets. And you see this one right here, it's perfect. 945 imbalance right here, right at the start of the macro, just delivering one side. Price has only been delivering straight down right here. And so what do we know based on the logic of the first imbalance that takes liquidity is that it likely wants to get retraced into. Now, of course, this wasn't the first imbalance on this entire move, but it was the first imbalance that took out this low, and if you look all the way to the left, this low as well. And the macro essentially started that move. So that's how you can blend this time element of the macro with an imbalance to monitor that range. If you're truly bullish here, price should have closed above this imbalance, used this as support. But you can see here, price struggled to close inside, rejected a bit, went lower. So this is a warning sign that it just told me, all right, price is just going to keep going sideways, and it's likely just going to end up being a slight profit or just cut the position right before market close. So do you now see how we can blend these time elements, like the cycle low I mentioned in my previous lectures, how this entire sequence from 1 to 6, or if you have more steps, whatever it may be, everything gets aligned at your point of interest. That's when this entire sequence happens. When price reaches that area, starts slowing down, forming a setup, you already know with your SMT, this is where price wants to reverse from. And at that point, it's really just about finding the right take profit areas and managing your position correctly according to the fractal market maker models. So hopefully this was a helpful trade breakdown of one of the trades that presented itself this week. And I'm sure that if you start looking into some of the things that I mentioned in this video, that you will have some light bulb moments. I'm sure of that. So with that being said, thank you for watching, and I'll see you in the next one.